Investors in Nigeria's local bond market are tilting towards the short to mid-end of the curve, particularly the 2026 and 2034 papers. Traders at UB expect this week to end on a similar note as investors take position for the 450 billion naira bond auction scheduled for the 15th of April this year. Kenneth Onuoha, team member Assets and Liabilities at UBA, joins me for market updates. Kenneth, thank you for joining us today.
Thank you for having me.
Let's get right to it. System liquidity opened lower at a negative of 599 billion yesterday. After that, almost sales deduction of about 677 billion. Bring us up to speed on where liquidity is at the market right now, and also then take us through other segments of the market.
All right, that's fine. Like you rightly pointed out, system liquidity has shown some level of topsy-turviness this week. It started on Monday, on Tuesday, the first trading day of the week. On April 2nd, we saw system liquidity open at about 104 billion. What we then noticed thereafter was that clearly the next working day, which was the day after, we saw system liquidity increased about 500 billion. Now, CBN then did notify the market of an OMO auction, which led to over 676.56 or 65 billion leaving the system, thereby causing the system to go into repo. However, by way of CBN intervention, we saw that the system liquidity currently, as today, as at this moment, is currently in a net credit balance of over 347 billion. Clearly, we're seeing the work of the CBN, the actions of CBN, very evident here, because the idea is to ensure that the system is not exactly overly liquid, but then not also completely illiquid, but enough to sustain the banking system. Having said that, moving on quickly to the NTB market, we saw a slew of activities in the course of this week. On Wednesday, we were greeted with the OMO auction, where 500 billion was put up on offer across 3 standard maturities, and we saw the subscription levels hit at almost 1.2 trillion, and of course that led to total sales being about 676.65 billion being put up on, being allotted to the general public. Now, we saw rates being maintained across the 3 maturities. To the long end, we saw it actually print at about 21.125%. Now, the interesting fact is the secondary market. On the secondary market, we have seen is there has been bearish sentiment due to low liquidity levels. What that has translated into has been interest seen on the long end of the curve, where you've seen demand interest seen primarily around the March 25th and the April 1st OMO paper, and deals have been converted at about 19.5%, which is an increase from the 19% levels we've seen previously. On the bond market, what we have seen is we saw on the 2nd of April, the DMO issued the circular, which you had alluded to, stating that the Q2 bond issuance circular, where we saw the dates fixed for April 15th, May 13th, and June 17th.
So about 450 billion. So, but yes. What are your expectations around that particular bond auction in terms of subscription rates? And the stop
we
rates?
expect, of course, we expect this to continually follow the previous bond auctions and all other auctions that we have seen lately. We expect subscriptions to be well in over excess of the current bond offering of about 450 billion, whereas the new paper 2029 5-year paper, which is supposed to be alongside the reopening of the 2031s and 2034s. So we expect that subscription levels will be high, right, and rates would obviously be trending towards edging closer to the MPR.
Right. Thank you so much, Kenneth, for bringing us up to speed. We appreciate your time on the show today. Kenneth Onuoha, team member, Assets and Liabilities at UBA.